Hi, good morning to you. I just wanted to do a quick video this morning just to recap on the 5-minute bar alternative system which I mentioned on my email yesterday. This is slightly different to the one in the manual. Actually, it's lower risk, and it's something you can use when we don't have a clear signal for a magnet or a lifestyle or another trade setup which I'm looking for the service. So it's really just a low risk entry mechanism in the market to confirm our analysis. The principle behind the 5-minute bar entry system is that the FTSE likes to trade the length of its first 5-minute bar on most days. There's a few days where it doesn't work so well. I do cover that at my seminar, but certainly on most days the market will trade the length of its first 5-minute bar. The one in the manual, I use that a little bit more selectively on high probability days when the market is more likely to trend. But certainly this particular method, which I'm just about to go through, you can use on most days. And as I say, it's very good when market conditions aren't throwing out very good signals. Conditions are pretty flat, and you're just looking for something to confirm your analysis. Today isn't the greatest example because we've got very flat conditions. It's August, many traders are away on holiday, but even so, I'll press on just to reinforce the technique which I mentioned yesterday and on in my email today. So the first thing we do is we measure the first 5-minute bar at 8 o'clock. You will see that the high was 5849. And the low was 5842.7. So we round that up to 6 points. What's important to note here is I don't round up the high and the low of the bar. Okay, so the low is 5842.7 and the high is 5849. We are then triggered long or short once the market moves 2 pips above that level. So for the buy side, we would have been triggered at 5851. And for the downside sell trigger, we would have been triggered at 5840.7. And what I'm doing, especially if it's a very small bar, the breakout happens very, very quickly. So what I do is I have my ticket open, my deal ticket open on my desktop. I'm looking at the chart, and as soon as I see that the price move 2 pips above or below for the breakout, I then click buy or sell. I'm not looking at spreads or anything. I'll just click the sell button or the buy button. And the price on your charts should be the mid price. Okay, so that's the mid price between the offer and the bid. So today we can see that the market opened, and the market actually did attempt to break to the downside, but the important thing to note here is we didn't see the 2 pip clear move. So the market actually came very close, but it only went to 5840.8. So no trigger to the downside. So then we're looking for the break to. We're then extending the time. We're looking to find out when it's going to break above. So in this case, it actually did break out to the upside. You would have been triggered at 5851 around this time, and you would have put your stop 2 pips below the low of that bar initially. Once you've traded the length of the bar, which remember is 6 points, so you would have come out of the trade at 5855. Let me just see, yeah, 5855, because you've got to deduct 2 points for your for the breakout. So the bar length was 6 points. We take 2 off for our confirmation of the 2 pip break. So that leaves us at 5855. So at that point, once you've seen the market trade the length of the bar, you then take your half profits. You then move your stop up to your entry, which would 5851. Again, if you're at your screen, you might prefer just to sort of manually come out of these trades. That's certainly what I do. If you're not at your screen, you'll need to place a stop. But certainly, if I'm trading, I'm at my screen, then I will just come out visually once I see these levels are taken out. So the idea is that once we're in this risk-free trade, we then want the market to press on and try and latch on to a larger move in the market. Or if you're thinking that the market's going to consolidate, it's very flat conditions, you might just want to scalp the length of the 5-minute bar. As I said, today it's very, very flat conditions today at the moment. It has been for the last couple of weeks. So the bar length was very small, but usually the bar length is around 10 to 12 points. So still some healthy points which you can pick up on most days. As I said, it's very, very low risk, and you can use this. Today I didn't actually trade the upside for the 5-minute bar. I could have, but I didn't want to because I'm looking for a downward move. And the downward move I wanted to be confirmed with the 5-minute bar break. We didn't get that, so no trade for me. But this is really just a principle behind the 5-minute bar, this particular alternative method which I wanted to share with you. So hopefully you found that interesting, and I'll probably look to do a few more videos like this just to make things reinforce the teaching methods which I talk about on my emails. So thank you very much. Cheers.